Hi, I'm Annie Sovereign. I am a broker here in Fort Worth, and today I want to walk you through the home buying process. The first piece that we're going to talk about is lending. Not all lending situations are the same. So basically, we could have two very similar incomes, two people that make very similar incomes that are qualified for two very different amounts. And that is because when you are going to get a home loan, they are going to look at a number of things. They want to look at what money you have coming in, what money you have going out, and what assets you have. So do you have a 401k? Do you have a money market account? What do you have asset-wise that we might be able to tap into? So a lot of people don't know that they can use your 401k to purchase a home. Also, they may not know that there are down payment assistance programs that exist. There are different types of loans. So a zero down loan, VA is a zero down loan. USDA is a zero down loan. FHA and conventional are other types of loans, but they also do have down payment assistance programs attached to them if you don't have the funds to make a big down payment. Now, the more you put down, the less your monthly payment is going to be. They're also going to consider your credit score. So a lot of people think that they have to have perfect credit to buy a house, and that's not the case. Anything below a 580, you can get a loan for a credit score below 580. However, the terms are not great. So what we want to do is, if you are in that situation, let's figure out how to get your credit score up above that 580 limit so that now you have more better terms in terms of your loan and your interest rate, and pay. All of that affects your payment. So whatever is going to make you the most comfortable is what we want to do. I say this all the time. What you can afford and what you should afford are very different. So we don't want to shop at the top of your budget that is going to max you out. You could be approved for $500,000, but that payment makes you uncomfortable. Really, where you want to be shopping is maybe the 425 range, because you've seen that monthly payment. You know that that's a comfortable payment for you because you have all of these other extracurricular activities that you like maybe you have a boat, maybe your kids are playing club sports, all of that needs to be considered in what your purchase price is. We don't want somebody to be house poor. First-time home buyers especially, I always tell them that your first home is not your dream home. Your first home should be your stepping stone. This should be an opportunity for you to get into the market. And it's always very, very scary for first-time home buyers because they've never done this before and they feel like they don't know that they can. So I could go into the rent analogy, whereas if you're paying $2,000 a month in rent over 5 years, you have now spent $120,000 on that $2,000 mortgage over 5 years. So if you were to go and purchase, about half of your monthly payment is going to go to your principal balance. But at least you're paying down something, where on the other hand, you're just lighting it on fire, giving it to somebody else, and somebody else is lighting their pockets with it. So every situation is unique. We love to come up with a game plan first. Just because you're pre-approved doesn't mean you're ready to start shopping then. But let's, put together a game plan to get you started to the path of homeownership. So once we figured out all of this and we've got it in a pretty picture, we know what your budget is, then we're going to start shopping. And whenever I show clients houses, it is my job to walk the perimeter, make sure that I can see where the soil lines are. Is a slab exposed? Are there cracks on the exterior of the house? Those stair step cracks are often can be foundation issues. They're not always, but for the most part, if it's a stair step, there's some sort of foundation shifting going on. Sometimes you've got settlement cracks and things like that, which aren't that big of a deal. I am not a home inspector, but it is my job when I'm walking you through a house to identify the defects. I'm not being negative. I want you to know what you're purchasing. I don't want it to be a shock when you get an inspector in there and they've pointed out all of these things and you're like, oh my gosh, this is overwhelming. If we know what some of these things are ahead of time, we can actually ask before you do the inspections for those things to be included. So, I'm looking for water damage on the ceiling. I know if you're buying FHA that they're going to require GFCI outlets. Just trying to think of like different scenarios, but yet VA, you have to get a termite inspection. But as I'm walking through a property, I want you to understand what you're purchasing. And so I'm going to point out the defects. I'm walking that house as I've seen a lot of houses. So I know when something looks off. A lot of times I could be standing in a room and I'm like, it's sloping in that corner. I can feel it because I've done this so many times. So a first-time home buyer, that process can be a little scary. Once we find a home that you like, then it's time to make an offer. And when we make an offer on a property, the first thing I tell my clients to do is we're going to go back to the lender and we're going to ask them what your cash to close is and what your monthly payment's going to be. And every house is different. It could be in a different city or a different taxable, if they've got a MUD or they've got a PID, these are things that are additional taxes on top of your property tax. And so if you're in an area that has one of those things, we want to understand that. We want to know what your financial obligation is. So that's just one thing that we do before we even make an offer. Through the negotiation process, typically the first offer does not get accepted. We're especially in this market right now in Fort Worth, we are in a buyer's market. There's a lot of opportunity for the buyer to ask for things because homes are sitting on the market a little longer. So if they've sat on the market for over 30 days and there's no competing offers, we're going kind of aggressively. We can ask for a decrease in price, but more importantly, we can ask for sellers' concessions. So when we ask for concessions, those concessions can be used to pay for your closing cost, or they can be used to buy down your interest rate. And your interest rate over the life of your loan, buying that interest rate down really could save you a ton of money. So those are the two things that we're really focused on in this market right now. And then once you're under contract, both parties have accepted, you've gone back and countered a few times, then you're going to start your option period. So the things that we negotiate within the contract, typically I always do a 7-day option and at a cost of $150. Not every realtor uses the same, some say $50 a day. I don't do that. We go in at $150. If they accept it, sometimes they won't, and they'll come back and say that they want you to pay a little more. But through that inspection process, you've got basically 7 days where you can do your due diligence and look at a property. You want your inspector to come in and pick it apart. You want them to find all the defects. The main things that we focus on are the roof, the plumbing, the HVAC, and foundation. So if any of those things are wrong, we typically will ask for them. You're going to see a lot of sealing around toilets. Really small stuff is going to come back on an inspection report, and that is the inspector's job. But we don't want to try to be really picky when we're asking for repairs unless the house is a complete disaster, meaning that there's no way that you could move forward knowing what you know unless they're repaired. You want to make sure that you use an inspector that's going to tell you exactly what those big ticket items are that you should focus on. And it's my job as a realtor to kind of guide you in that way too. I always recommend that you get your line scoped. Older homes, sometimes they'll have cast iron plumbing. So I want you to understand what that's going to look like when you go to purchase a property. Down the line, cast iron could crumble, and then now you're going to have to pay to have those pipes replaced. And do you have the funds to do that? So if a roof is over 10 years in age, your insurance company will likely make you pay for the entire replacement cost once that becomes your home. And that's just because roofs in Texas, we get hit with hail and storm, and it's just more expensive now than it was before. So foundation, that's a big problem in Texas. If they're, usually I can see when I walk into a house, if they have, like I said, if I'm standing in one corner, I can see it sloping in the other. But if they don't have any sort of sprinklers on the exterior of their home, and the ground is like cracking and dry, I more oftentimes than not would say if they don't have foundation issues, they probably will if you don't get that ground taken care of. In Texas, the soil is so important to keeping your foundation sound and stable. So through the inspection process, you're going to see all of these ticket items. We focus on these main ones because those are the biggest ticket items. So after the inspection process, if you're moving forward and you've come to an agreement on repairs, the next piece is going to be your financing contingency. So if you are using financing to purchase a home, we usually have 21 days built into a contract for that. And that financing period is really important for you to make sure that we've checked all of the boxes. A lot of these loans are government loans, and so they've got very specific guidelines that we have to adhere to, and that 21 days gives them enough time to be able to sort through those things. They're going to verify your employment. We're going to start the underwriting process. We're going to get an appraisal. So if the appraisal comes in higher than what you purchased, it's great. You have automatic equity. That means that your home is worth more than what you're purchasing it for. If it comes in lower, then you have the opportunity to negotiate. On an FHA loan, you actually have an out in the contract, and VA. Sometimes in a conventional, we'll write it in that way so that if it doesn't appraise, because we think it's priced high, if it doesn't appraise, then we want to be able to back out and still get our earnest money back. HOA documents. You have 3 days after you review your HOA documents. If you don't like anything in your HOA documents, you have an opportunity to back out. And I would read those, because if you have plans to put a shop, or you want to know what their stipulations are. And then once we've gone through all of those, then we're going to the closing table, which is the most fun. That's when you officially buy your house. So your title company, they are a third party. They're not on either side of the transaction. That's just a third party that handles all the money and the paperwork, and they kind of keep everyone on track. So once we get to closing, they've already done their title work, basically making sure that there's no clouds on title, making sure that somebody doesn't have rights to the property other than the people who are selling the property. And if there's any liens that need to be paid off, they're going to make sure that those get paid, so that the next purchaser of the property doesn't get stuck with somebody else's decisions. So we'll schedule the closing, and you're there to sign your paperwork, and then you will officially get your keys and you become a homeowner. I hope you found this information helpful. I'm Annie Sovereign. I'm a broker here in Fort Worth, and I have a team. We serve all over the DFW Metroplex. So if you ever have any questions, feel free to reach out, hit that like and subscribe button, and I'll see you around.